Hello, welcome to the Cube Pod. I'm John Furrier with Dave Vellante, episode 129. They're in the books. Dave, salute to you.
Hello,
Give you the
John.
Dave. I
How
salute
you
the
doing?
down. You salute up. Doing good. I'm in my apartment. Didn't even make it into the NYSE today. Heard CJ was in from Mongo with his earnings.
Yeah, they
Crushed it.
crushed it.
Dell stocks soaring on data center. Man, boy, they must be watching the Cube videos from our Dell Tech World coverage, and we crushed it.
In
Damn,
our
that was
AI
a great
factory
event.
series. Oh my God, unbelievable.
Yeah, I was talking to some friends. They said it was in Hawaii for the Actai Maui Global. Brian Baum was there, NYC Wired, the whole team. And Ben, my new friend, he's a listener. He's like, you got to disagree with Dave more. You're too agreeable. I'm like, how could you not freaking agree? Nvidia's crushing it. Although we did call that it's a buy, and we didn't say that. So, Dave, I'm going to try to disagree with you as much as I possibly can.
All right, I'll try to take a
Yeah.
controversial approach here. I don't know. Let's see.
I'll start
I'll have
with
to
one.
think about that to
Putin's
try to come up
$26
with
billion
something.
longevity push.
Wait,
You
say it
know,
again. I was, yeah,
Putin's 26 billion longevity push. Wall Street Journal had that
yeah, I saw
story
that.
4 hours ago. This whole longevity thing's hot. Top news here today: venture capital turns to hardware bets as AI threatens software companies. Of course, Dell's on the front page after a monster after
What a quarter.
hours.
What a
Um,
quarter. I mean, my God. I mean, did you see the numbers? It
I
was
mean,
insane.
it's
We
unbelievable.
got we got to go through this for people who didn't see it. Dell's revenues were almost 44 billion for the quarter, up 88%. And it's ISG, which is where the AI servers are, was revenues up 181%. Their operating income in ISG was up over 200%. It's unbelievable, 214% for the company. And then what was really a shock, so AI optimized servers revenue was up 757% to 16
Yeah,
billion.
yeah.
757%. Check this out. This was what blew everybody away. Traditional servers and networking revenue up 92%. Traditional servers, storage up 8%, which is they're back to gaining share. I think NetApp was up 5%. So finally, storage is gaining. I think they had a lot of easy compares, frankly. But same thing with client. Client was up 17%, and then operating income was up 79%. So, and again, I think it was easy compares, and they were sandbagging a little bit, but they didn't know that the market was going to rebound the way it did. I think, John, what happened, and we saw this is, I think people couldn't buy Mac Minis, so they went to Dell and started buying Dell PCs.
Yeah, and
You know?
NVIDIA is going to get a lot of that too because Dell has the Precision Pro, which is
Yeah.
we talked about as the perfect thing. What's interesting to me about this whole Dell price thing, which by the way we've been covering, if you go back at our AI Factory series, which we basically created, and they were a big supporter of that with NVIDIA. Thank you, NVIDIA and Dell, for being an anchor sponsor for the NYSE Wired, which has grown out of control. It was nothing. There was no conversation around AI Factory since our involvement. It's been skyrocketing, and I think we had a lot to do with that narrative. But also Dell's server packaging, rackable systems, the rack scale systems are huge. I want to get to that into detail with you, but the stock market is talking all about Dell stock because from a market standpoint, they're crushing it. And you pointed out some of the numbers, but some of the scuttlebutt is Trump's taking credit for it. He's taking credit for all the endorsements in the midterms. Like I endorse everyone. Everyone I talk to wins.
He bought their stock.
And
Well, I
if you
guess
look
his
at Dell's
son.
share price since Donald Trump bought into Dell, it
Yeah.
was a little bit over 100. And then in March of last year, Trump praises Dell, and it's been
Unbelievable.
skyrocketing ever since. And then they announced a Pentagon contract. And so here's the press trying to conflate Trump. And of course, Trump's taking the credit. And we know Trump killed the Jedi deal. So, the Trump bounce for
Yeah.
tech is coming. What's everyone else going to get? I mean, Apple's going to get a major payday if Dell's got this kind of Trump bump. Can
But
you
I mean, how
imagine?
do you feel about that? I mean, I don't know. How was it?
I
It
just
must have
think it's
been.
corollary. Data can say anything, but obviously the fact that people are focusing on Trump transactions, I think it has nothing to do with. I think Trump was smart to invest, but since the Dell family donated $6 billion to fund Trump's account for kids, that was December in 2024. Okay, it was little over, it's between about 130. Okay, now it's like pushing over 400. So, you know,
But it kind of creates this, I don't know, this perception of, I want to say wrongdoing because I think it was an arm's length transaction. But I mean, it's just, I don't know. There's like new rules. Let's just leave it there. But I will say this. You know what Dell's mode is? Dell's mode is this nobody can do this business. I mean, you think about it, they have a crummy low gross margin, like high teens gross margin business. Their operating margins are in the single digits. You compare that with like Cisco in the mid 30s, AWS is in the high 30s. Nobody wants this business. Nobody can create this business. Nobody can compete with this. And so what the way they've done this is they say, all right, we're happy with this lower margin business. Of course, they want higher margins, but we're just going to go so good at supply chain in massive volume that nobody will be able to compete with us.
what did they do for revenue in the quarter?
It's like 44 billion in the
Okay.
quarter. 44
HP
billion.
HP did 14 billion.
Yeah, and so
Okay.
HP split off its PC division years ago. This is where Dell was just like, "Thank you." That was like a gift
Gift
to
from heaven.
Dell.
Gift from
And
heaven. If you think about the server business too, Dave, because the HP is the PC and commodities business, right? It's the printers and the PCs. And remember, you and I had a big debate. I mean, we were both kind of in agreement. It was a good debate, healthy debate, though. Do they break it up or not? And what was my argument? My argument was, if you
printers,
remember, keep
printers,
the scale. You got
printers.
PCs and printers and servers. You got the manufacturing scale. And if you look at Michael Dell, okay, he's winning on supply chain scale. But here's the catch, and this is why the HP spin out with HP and HPE was a failure, because HPE is the servers and HP Inc. is the printers and PCs, the so-called consumer business. That's the way they thought about it. They probably got some really good advice from the management consultants. But if you look at Dell's numbers, not only are they doing great on the client side with the supply chain, but if the server business actually is inverted the go to market. In the old PC revolution, the PC set the agenda, then the servers came on, Wintel servers, Unix workstations, and then you had proprietary workstations, SGI and others, and then ultimately Windows servers, Windows processors with the servers. So you have a PC in the old days that got so good with Intel processors that just made a server for an microprocessor for the server. So servers came after PCs. If you look at the AI business, it's completely inverted. The servers are coming first, and the PCs are coming second. So if you look at their XPS one, we just got a great machine. Love the new XPS from Dell, super powerful and light, but they got the Precision Pro and they got the Nvidia relationship. They're going to have a super God box for a PC on the desk. And that's going to be the new development workstation, like the Mac Minis were in the short term for people just coding OpenClaw. But they don't win without the servers right now. So Dell's rack scale systems have such a high GPU utilization. It's the preferred purchase for all these build out infrastructure players like the neoclouds. And why is that the case? Is because everyone else has cobbled together the networking, the storage, the interconnects, and they're essentially wiring up the racks like old school servers when Dell's just shipping a prefabricated rack 6 hours from shipping it to install, from the dock to installation, 6 hours. That's essentially like just turning on the switch. So Dell has engineered essentially a super server. Okay. It's a shitload of Nvidia. It's $1 million, whatever the price point you want to have, but they're essentially shipping super servers that are all configured. That's in their DNA, Dave, except it's winning everything. So HPE doesn't have that one. They don't have the server leadership that Dell does, and they don't have the supply chain leverage. So they can't go to Nvidia and kind of get the kind of terms that Dell does. Dell's probably going to have the first Vera Rubin out. We're hearing, those kinds of things coming out. So you're stating a lot of this stuff's happening. Does not happen if Dell breaks up their PC business. Zero.
Well, and just to your
Zero
point,
chance.
the
Zero
rack is
chance.
the rack is the new unit of compute. The other thing too is I've been following Dell for a long time. I used to say all the time, you go back to when they owned VMware, and they were trading at literally 40, 50 cents on the revenue dollar. The revenue multiple was well under one. And HPE was at one, always kind of roughly at one. Dell is now trading at about 1.7x revenue. And so they've completely flipped that calculus. They got AI servers are cranking. Their traditional servers are also cranking because people are modernizing their existing infrastructure. Their storage business is now, we heard last week at Dell Tech World, they're launching a new storage cycle. So finally, Dell is getting its act together in storage, grew 8% this quarter. Now they're just starting to kick in. They got the new AI data platform that's longer term. And then the PCs running, now people need PCs to run NemoClaw. It's like work from home all over again, massive demand. So if all of those lines of business kick in at the same time, the cash flow is going to be amazing. Now, Dell they blew away the consensus. They raised the guidance, but they actually kind of guided like second half, actually somewhat lumpier and softer than the first half. Who knows? They're probably sandbagging, but it's smart to sandbag because they do have a lumpy business. But oh my God, overnight, like this past Dell Tech World was the most relevant Dell Tech World I've ever seen. You had Jensen up on stage signing the Dell boxes. Michael said, "I don't have to sign it. My name's already on it." It was an epic moment. So yeah, Dell is all the talk of the town.
Yeah.
You know, big coverage in the Journal, talking about them all day on CNBC and other
Yeah.
and
I mean,
and Bloomberg. I mean,
all
wow.
those stock tips I gave on Dell, everybody's like, ah, it's not really moving. Like, just hold on to it. It's a hold, in my opinion. I'm not a broker. I don't give advice, but I like Dell. All their bets came in. Jeff Clark detailed that out. He's the new chairman of the of the company. So like he's kicking ass,
I just
and they
remember,
made
John.
good bets, Dave.
I just remember when their balance sheet was like, ugh. They had the VMware overhang. And Tom Sweet would stand up at the financial analyst meeting and said, "Look, this is what we're going to do. We're going to get back to high quality, balance sheet. We're going to delever, reduce the debt. That's one knob. Here are the other knobs that we're going to turn." They would show the slides how they're number one according to IDC, and everybody would roll their eyes. Oh yeah, we've seen that slide again. But they just stuck to their knitting. They have a very strong, they do what they say they're going to do, and they're executing. It's
You
been
know,
remarkable transformation. I mean, I can't think of a company that has transformed to this degree in
yeah,
enterprise tech.
and I
I mean,
think they're going to do
Apple,
well. I think they're
Apple
going to
is
do
the
well.
only
And
close example, John. I mean, Apple's maybe the more remarkable example, but that's a kind of exception that proves the rule.
well, Apple made that playbook when Michael Dell made that comment, like, hey, maybe let's give the money back to shareholders when they were in the worst around 2009. But they turned it around, and I think Dell has turned it around. But you think about this core competency of Dell in their DNA. We talked about this on theCUBE when we were at their event. Their DNA is supply chain, build to order. One of their things they've innovated. Remember, their big innovation was to build it to order, and they put all the factories near Dell, make the parts all accessible. That was, 1.0 supply chain. The web came. You can buy online, mail order turns into online commerce. And then obviously they went private, then went public again. Got the VMware asset, as you said, it's one of the best acquisitions they've ever acquired with the EMC. And then that just gave them the cash, and then can reinvest. But what they're doing now is essentially, it looks like the PC revolution, except it's the AI revolution. It's packaging, it's supply chain, and instead of having factories right near you, you just got to get allocation because the old expression, data is the new oil. Remember the big data expression? Well, the Wall Street Journal's headline actually says, from today, AI has made memory chips more valuable than oil. If you look at Micron, Samsung, and SK Hynix, they make all the memory inside these boxes that Dell's packaging properly. They're over $1 trillion valuation each. So that you get the valuation soaring on the electronics. This is clearly the chip business is booming. Dell is really good at this, so they don't need to have factories next to their manufacturing. Just got to get allocation in the fabs, right? So, and get long-term contracts, and they got muscle. They got the PC volume, they got the component volume, they got the server volume, now with AI factories and the customers. And now all they got to do is get the software stacks to be, turnkey in whatever use cases. So, you could build to order a AI factory. And just think about that and let that land for a second, Dave. Build to order. You order it, they run workloads on it, it's the right tuning, and they ship it to you. Lands on the loading dock, 6 hours later, it's installed and running workloads in production. That is as close to build to order PC workflow, but it's just changed. So with all these memory chips, all the new components re-architected, this is a new server. So to
Well,
me, I think Michael Dell, if I'm him, I'm like, this is just a server. We know how to do that at scale. So like, and meanwhile, everyone else is like the homebrew computer club. Hey, I'll put a hard drive in, I'll add this in, load some software, write a connector. You know, they're dead.
well, I
I
mean,
mean, how do you compete with that?
you can't with that with the volume that they're doing. I think there's a couple. The big question is it sustainable? But before I sort of go there, you knew when Nvidia announced its earnings, they blew away their quarter yet again, and of course the stock was flat and went down. But I remember at the time saying, well, Dell's going to have a great quarter because Nvidia is the harbinger. They basically bet their original business on Intel. They're betting their current business on Nvidia, and they are a massive, distribution channel. Um, and then you get, the problem with Nvidia stock has is its float is like 20 billion. Dell's got float's probably about a few hundred million. And so, a move like this, I mean, a beat like this can move the stock quite dramatically. The question is it sustainable? I do think it's a lumpy business. If the CapEx, if the hyperscalers and the CapEx kind of slow down a little bit, and maybe the core weaves where Dell's doing a lot of business and the AI clouds, aren't spending as much, that will have an impact. And we'll see if enterprises, the thing about enterprises now is the enterprises are air cooled. And the question is, will they eventually refactor their data centers to be water cooled? Floyer thinks so, by the way. Floyer, did I tell you this? Floyer said to me the other day, we were having this conversation because Jeff Clark was sharing with us, these data centers, the enterprises aren't refactoring their data center to become water cooled. They're air cooled. So we're selling a lot of air cooled stuff. And what Floyer said to me is, yeah, I remember when Hitachi and Amdahl used to say that about IBM, that they used to sell that as a benefit that they were air cooled. Well, both of them went out of business, well, the mainframe business, because you had to have water cooled. So Floyer's argument is that at some point, it might take 4 or 5 years, it's going to be that water cooled is going to be so compelling, and what NVIDIA is shipping with water cooled is going to be so much more cost effective and performant than the air cooled stuff that everybody's going to have to move. That's a bold ass prediction. I'm not sure I buy it. I think they're going to be tapping in to neo clouds and other token generators, but then you got to pay the API tax. So I don't know. What do you think about that? You think enterprises are actually going to go back to the days of data center water cooled?
I think water cooled it will continue to work, but I think it's going to come down to like the on chip stuff's going to be key. I think air cool has to be a solution because, like you said, a lot of people aren't retrofitting their data centers. But if you look at the cooling, like for example, the Precision Pro and some of the Dell, desktop servers, whatever word they use these days, it's got cooling in there. All right, they have hoses inside the machine. So I think you're going to see a lot more cooling probably in the short term, but I think you're going to see a combination of hybrid because I think you're looking at some of the technology. I was following some of the Nvidia guys this week, talking some of the techies. You're getting byte performance inference in real time, which means you can change how fast you can do inference. What that means is that inference is going to be smarter on smaller, faster devices, meaning you don't need a lot of memory like the big honking servers. So you're seeing, any kind of like distributed computing edge or node is going to have more inference. That's not going to be water cooled. Only the big factories are going to have water cooling. And I think that's standard. And you could build those from scratch. So where someone's going to build a big data center, they'll retrofit it because they're going to use every single piece of the infrastructure there, the walls, the substrate, everything is going to be engineered for the squeezing as much energy out of the system as possible. So I think the bigger problem to focus on is the GPU utilization. And if you look at most of the neo clouds, this is a huge problem that nobody's talking about, that a lot of these GPUs are underutilized. Except for NVIDIA, you had Arthur Patterson basically saying theCUBE is 99% utilization with the Dell rack scale servers. That's incredible number because they're purpose building to order on the workloads. Now that's granted big workloads and they're tailored, but that's unheard of utilization. Okay. Most of the self-built infrastructure has between 30 and 60% utilization of GPUs. That means these most expensive things are sitting idle. That's
Well,
like
what
a
Arthur Lewis was saying,
PhD sitting there saying, I'm going to just sit here and just twiddle my thumbs.
what Arthur Lewis was saying is that he kind of clarified. He said the neo clouds, AI clouds, are running at very, very high utilization. We know
Yeah,
in
because they're
talking,
using Dell.
well, and we know, and they know what they're doing. They got people like Hen Goldberg that running engineering,
Yeah, headquarters.
and other like really, really smart people. But we know from talking to enterprises that their GPUs that they have installed are underutilized. They, kind of initially they didn't know what to do with all this power, and they're learning. And so, it takes time. Um, anyway, I know we got tight time today, but what else you want to talk about? Snowflake. Do you see Snowflake? Oh my
Snowflake
God.
blew the numbers away. You got Anthropic's valuation, looking at almost $1 trillion valuation, $965 billion valuation, topping OpenAI. So there, a lot of people are comparing OpenAI and Anthropic into this showdown, and a lot of people are saying that, and looking at the revenue numbers, that Anthropic's beating OpenAI. Now, this is where something that it's not yet clear on how the revenue is being recognized, but they're saying that Anthropic rockets into the lead against OpenAI. So that's an interesting story we're tracking because, I think that OpenAI hasn't turned on the spigot yet. I will say Anthropic is very strong at monetization. They get you hooked on Claude and it's like add more. It's like add more tokens. It's like they're
Wow.
really good at monetization with their tool, their
Because their product is
application.
so good, you get hooked to it, and they're compute constrained. So I, I upgraded the other day because I ran into that with Claude, and I upgraded, and they still rate limited me. I said, I just friggin' upgraded, and they're like, yeah, we know that can be frustrating. We're sorry. I'm
Yeah.
like, I just paid you like a couple $100 a month, and you're gonna rate limit me? I'm
Yeah.
like,
Yeah.
whoa.
Well, yeah, until they buy more shit from Amazon. So, I mean, look, I have a problem with Claude because like I
Or
have the
or
same,
Grok or XAI, right? Or Space
well, they're
XAI.
using a lot of I can tell they're using a lot of local resource because I have two Macs, one I travel with, one here at home. Okay. And the Mac at home doesn't have the same um, co-work projects as my other Mac does. And so what's happened, I'm doing a lot more
Oh
obviously
yeah.
traveling. So my traveling Mac has all my good shit on there, and my home PC has different stuff. So they're like, "Oh, check, make sure you're using the right username." I'm using the right username. It's not syncing up. So I don't know if you've seen that or anyone else has had the similar experience. Trying
No,
to
I
troubleshoot
haven't.
it.
I do same thing, multiple computers. But
Do
you're
you
saying
have the
that the
same
memory's
projects?
not, yeah, I
The
get the
the
same project.
recents, the recent projects.
You're not saying you're not syncing up your projects. Maybe you got a setting that says you don't want to sync.
No,
Maybe
it's
that's a
there.
governance thing that you set up.
No, it's actually pissing me off, but it's okay. I can toggle between both. So it's good. It's good enough where my agents that I'm working on can run on. But I think that speaks to the the market, right? You mentioned Snowflake. You got IBM and Red Hat pledged $1 billion for AI-driven open source security initiative. Everybody's refactoring their
I
company
wrote
with
that up. Did
AI.
you see that? I followed on my Oracle because Oracle a few weeks ago came out. Did you see that? So Oracle basically said, "Hey, you should upgrade to autonomous. And spend some money with us. Or if you don't upgrade, we're going to change the protocol." So they're monetizing. IBM and Red Hat are creating a service. They're investing like 5 billion, which I don't know over what time period. That's sort of irrelevant to me. But they're basically monetizing, that risk mitigation with a different strategy. Oracle saying, "Come on, all in to our database." IBM Red Hat saying, "Hey, we'll take care of it. We'll have a service and open source software. We'll help you with skills and engineering talent, and we'll make sure that the upstream um, features get included." So, because instead of waiting around for committers, they're going to dive in. So that was kind of interesting. Um, we'll see how that all plays out. I wrote up a pretty detailed piece and laid out what I thought
It was
were
great. It
some
was
of
a
the
great post.
missing
Hey, I want
pieces.
to get your thoughts on this. I know we got a lot of time, but I want to get to the Snowflake. But did you see the Wall Street Journal article, and there's some also other articles out about Uber talking about they've all token maxed out.
Yeah, yeah, yeah,
So
yeah, yeah. That
the
was
AI bills are coming in, as we were just talking about Anthropic. Everyone's running wild with agents and using the productivity. And so this is why the revenue is so hot for OpenAI and Anthropic, but the AI budgets are being killed because they have to use the services. Now, to connect Dell back in here and even IBM and others in the enterprise, there's a huge on-premises activity, and it's not repatriation. There's maybe a little bit of repatriation. Some companies like to flex that meme and that dogma, but I think it's really what's happening is that enterprise users for the first time are doing stuff that's actually needle moving from a productivity standpoint. So enterprises all give everybody Claude and they're putting on their credit card or whatever, paying the bills, giving them budgets like Jensen said, and they're all maxing out. Here's what's going to happen. Dell, all you got to do is buy a Dell AI factory and you put it on prem. You have unlimited tokens. And I think when you're going to start to see is these AI builders not just be developers, they're going to be business teams, right? You're going to start to see the business user. And you and I have debated this and talked about how productivity, the spreadsheet and the Office suite with Windows in early days had massive productivity. So I think the upside to the AI factories on premises is going to be you just buy a box, whatever your form factor is, how big is your data center, how much power do you have, what's your budget, and you're going to give teams these precision pros from Dell or another machines. Give them another laptop. You can run models on these local machines and local servers, and then you can get the tokens going crazy until you lock in. And then when you lock in, you can budget it. This is something that nobody's talking about, Dave. And so I think
it's
this,
amazing that you're saying this. This is exactly what George and I were talking about today on Breaking Analysis. That there's actually, well, the CEOs initiated a top-down mandate for AI. A lot of the productivity is happening personal levels. People downloading Nemo Clause and Hermes and doing their own thing and driving productivity and paying for it themselves. And it's kind of like the PC era, John. Well, obviously some differences, but that's how it happened before you had connected servers and networks. Remember?
yeah, I mean, this is exactly what this is the revolution. And I think Dell, that's why I brought back the throwback to the PC revolution. The world is inverted, right? I think that I wrote a post called The Great Sorting around how this is going to sort out the winners and losers, the players from the pretenders, the wheat from the chaff, whatever you want to call it. But if you look at all the key things that's happened in the PC revolution, client server, the interconnect revolution with TCP IP, the internet, everything was consumer first and then flips. Here you have a blending between B to B to C, and you have this end user consumer feature called OpenAI and Anthropic and generative AI. But now with agents becoming personal, check your email, check your calendar, be an assistant, do a digital twin. That's popping up a lot. Our vision around what we're doing with theCUBE from 2, 3 years ago is working out great. But the idea that the servers are leading the charge is completely an inverted model.
I know. It's crazy.
Everything's inverting. So it's like conventional wisdom. Do it this way. That's the way we did it. It's almost the opposite. There was for the people who used to watch Seinfeld, was famous show with Jerry Seinfeld. There was an episode with George Costanza, and they say, whatever George does, do the opposite. And that was that theory. It's like, people who bet on Kramer's meme stocks. Whatever he recommends, do the opposite, the anti-Jim Cramer portfolio.
But
This is real. So you're starting to see the software paradigms flipped, the go-to-market paradigms flipped. It's organic now. It's no more paid media. You start to see everything different, but the game is still the same. So I think this is going to be the tell sign around how economics are going to get factored in. And I'm watching the token costs because it's not just tokenomics, Dave. It's the other costs of screwing up. I was talking with Calibra was in the Cube this week for a person you interviewed at the event. And he and I were also talking about with Ehab at Dell, CTO. If you look at the cost of tokens, it's going to make FinOps for the cloud look pale in comparison. The cost of the tokens is one thing, but if you screw up the workloads and don't get the governance right with the data, the consequences of a hack or fraud is the real tax. So I don't like the word tokenomics as the word. You can't call it AI ops for FinOps, but there's going to be a term around how do you quantify and budget and do ROI, do total cost of ownership, all those traditional, financial toolings around, typical purchases, payback. I think it's going to be a complete wild west for the next year at least before any CFO or anyone in finance actually locks in on the unit economics and the ROI, because I think it's too crazy to calculate. Right now, people are defaulting to tokens. Oh yeah, tokens cost this. Yeah, because you're buying a bunch of GPU time and you're using Claude or OpenAI. But hell, all we got to do is get a local, Precision Pro from Dell, and we can run it in my house, and I have unlimited tokens. And then you put a hackathon together there. Again, inversion is the theme.
So I think what's happening, I think you're right. You got the CapEx fueling the server build out, and then you got people tapping in through APIs to generate tokens. You got people saying, wow, that's getting a little expensive. So we're going to download our own local, Mac Mini or, Dell systems and do it locally. And that we're seeing now the bottoms up take hold. And I think that's how the ROI equation is going to play out. It's going to be personal productivity. And then what the risk there is, but I think this is a necessary step, is you're going to have islands of automation, but different departments and different people. Ultimately, organizations have to get beyond that, as we've been talking about. You got to organize around intelligence in the future, not around, the hierarchies of humans. And that's a huge change, and you're not going to get there overnight. But I think you're right. It was inverted, started out inverted. Now I think it's going to revert potentially. I don't know if you
Well,
agree.
you got 3 minutes. I want to get you to Snowflake because the Snowflake Summit's coming up. So is the Databricks Data and AI Summit. Snowflake crushed the earnings. I did not have that on my bingo card. I know you and were debating this, but I think Snowflake has really kind of pulled it together, Dave. What's your analysis? Give us the quick 2 cents on the Snowflake breakdown because, I think they're seeing that the execution side of their business kicking in. What did they do? What's changed?
Well, what's happening is first of all, they're getting out of their little, their analytics world, and they're doing things like Snowflake Intelligence, which you can talk to the data. And so they're moving into that BI space. They've obviously moved up into the governance space with Horizon and, competing with Databricks with Unity. I think eventually they're going to try to get into that system of intelligence space and that ontology. And I think the bottom line is when you have your data organized, like you do when you have Snowflake and you do when you have Databricks, you can bring AI to that data and actually get immediate results. Now, the question is going to, at some point, is going to be, okay, is it going to be more expensive to do that or to roll my own? And I think you're going to see some interesting conversations there. But right now, the simplicity of doing things like Cortex Code and Snowflake Intelligence, and it's all sort of governed and all inside that lovely blue blanket of Snowflake that's governed, that's shareable, that's secure, is paying off for the company. And I would
Yeah.
suspect Databricks not a public company, but I would suspect you're seeing a similar dynamic play out there. And I think you're going to see, a lot of really interesting innovations and advancements at Snowflake Summit this year. I've had the NDA. I'm actually really excited to get in there, and I just see that Snowflake and Databricks, they've crossed the Rubicon, meaning they're going beyond their analytics swim lane into new territory and new TAM, and they're winning because they got, customers with good data and clean
Yeah.
data being
And
used
it's
for
interesting
AI.
too. They've always bet on the commercial side. They always had a great install base. We've been following them for years. But I was really bullish on Databricks because they bet on the developer. What's interesting is that the enterprise adoption hasn't been strong this past year. And the developer community until OpenClaw and now you got Nemo Claw really hasn't kicked in. Right. So I think Databricks might have an opportunity to see if they can catch that, revenue wave. We'll see. I mean, but you got to give a
Databricks.
+1 to Snowflake on this one. Advantage Snowflake. Okay,
Well,
they matched the challenge on open tables. They
I mean,
brought in
definitely
AI.
they've definitely responded. But what you're seeing is that whole data pipeline, data engineering, data analyst, data science, that whole thing is collapsing into AI. And I think it's advantageous for both companies because it
Yeah.
simplifies the Hadoop madness. I got to go.
All right. Well, Dave, we'll see you later. You get your call at 5. I was getting my microphone set up a little bit on me today. But if you're watching and listening, we got a lot of events coming up. You got the Snowflake Summit. We got the Databricks Summit. We have a ton of events. We have the Raise Summit in Paris this year. They're doing a day zero event in around physical AI. That's booming. And of course, the NYSE Wired program, Cube Original, is growing very, very fast. Of course, that's an open community. And theCUBE obviously continues to cover the deep tech. A lot more C-suite involved. That means the transformations up and down the stack from chips to all the way up to the applications. And we're doing our best to bring it to you here. And I promise you, I won't agree with Dave as much, but I can't not agree with him on
Screw
some of
you,
these
John.
things. I can't, I can't stop
You guys
agreeing.
got
It's too good of a market.
it.
All right, Dave, we'll see you later.
See you later.